Hey everyone, it's Imran from Options Insight. This is a quick message to let you know we've got our options trading bootcamp happening this weekend, 29th and 30th of April. If you're worried about the potential recession, this is the time you want to learn how to weatherproof your portfolio. Okay, who knows where the bottom is in this thing? 3,800 on the S&P, 3,200 on the S&P. There's multiple targets out there. In this bootcamp, I teach you how to hedge your portfolio. I teach you multiple techniques, whether it's long vol, short skew. These are things you need to know how to navigate market swings. So come and check us out at our website, optionsinsight.com. This is an opportunity you don't want to miss. It's Imran from Options Insight, back with another macro options spotlight. Okay, so stocks were pretty flat last week as April OPEX, the pin did hold. Markets might be a bit freer to move, as we've been saying. Over the next couple of weeks as the long gamma position of April has kind of gone away. Now, the truth is, it's not always a given that that's going to happen. The market kind of needs a reason to move a lot of the time. So, maybe the big cap earnings, large mega cap tech earnings are going to be that reason to move. Remains to be seen. Asia and Europe were moving in opposite directions last week, but the moves were quite small. Commodity markets generally all corrected lower. Except for NatGas, which actually had a rare up week, up about 5%. But oil got a bit of a shoeing, 5% down, copper down 3%, and even precious metals having a bit of a tough time. We've got copper popping its head back below $4, which is a key level, and then gold once again unable to really break up towards those highs again, failing yet again to break all-time highs. Vols in general were down on the week, but seem to be stabilizing as some demand came back on the VIX via June and September calls, as we mentioned in our options overlay weekend product, where we do our VIX analysis. Commodity vols also hit down lower. NatGas down 10 points, pretty much the biggest drop there. And then positive carry in the US, in the equities in US and European markets there, pretty deep green, whereas Asia not so much. China kind of in negative 12 there. And then gold and NatGas were your main movers in negative carry, where everything else was in positive and providing theta earning opportunities. In terms of skew, we did see a strong bounce in skew, about 1 vol point in the 25 delta 1 month risk reversal, as debt ceiling concerns seemed to escalate in CDS markets. The VVIX also caught a really strong bid. It was up about 20 points last week, whereas the VIX was practically unchanged or lower. And so, clearly some downside tail pricing coming back into markets and filtering its way through. Precious metal skew bounced a bit as well for puts as the upside break kind of looks less likely now. And then NatGas skew dropped about 4 points on the week, still in the 85th percentile, but that was up at 98 percentile before at 10 vols. So the fact that's coming down from 10 vols to 3.5 may well be a sign that perceptions are changing a bit on where the next move comes in natural gas. Okay, earnings is the big focus this week. Probably the biggest week of the whole earnings season, with so many large caps reporting. Highlights obviously being your Microsoft, Meta, Google, and Amazon, but you've also got the big oil names as well on Friday. Obviously, after disappointing numbers from Netflix and Tesla last week, it'll be interesting to see if that trend persists in the general tech space. And they come in short of expectations. So far, the broader market has held up pretty well, which we do think was largely due to April OPEX. But this week's price action should be a bit more telling to see if the market's got some more movement in it. But ultimately, the correlation of earnings is going to be important in determining the fate of the indices. If the stocks disperse and some go up and some go down, then and in different directions, then maybe we're going to see minimal headline index volatility still. And that is something that the low VIX level is potentially already alluding to, because you do typically see dispersion within earnings season. But if it's a trend, right, and if what we've seen from the likes of Tesla and Netflix means that all tech companies are going through a bit of trouble here, because we are seeing just weakness coming through in terms of consumer demand for various products, then you might see all these tech names disappoint. And if they're all moving the same way, then guess what? The headline index is going to come down a reasonable amount. The other thing to keep an eye on is the debt ceiling speculation. So, we've got a 1 year US CDX spiking to quite high levels here, right? So we're looking at 130 basis points on this And this is higher than anything we saw in 2011 in the last debt ceiling debacle. Okay, so when the US debt was downgraded and markets did sell off around 15 to 20% in short order. So we think there's zero probability of a US default, but the market is starting to reflect some tail risk, and that is filtering through to things like S&P skew, things like VVIX, which is the vol or convexity. It's got various ways you can think about that term, but there are some tail risks coming back, and we think this is the driver of that, right? That this kind of concerns around the debt ceiling creating some turbulence in risk markets. Okay. Now, what else? NatGas demand picking up as sellers look exhausted, right? So NatGas, the only commodity on our dashboard that was green last week, we have seen bullish momentum divergences picking up over recent months. You can see that here where you got first low back there in October. You got another low here and another low here in price, and they are marked with higher lows in momentum. That is what we call momentum divergence. Okay, that typically makes us think there's some sort of bounce coming, and this is on the weekly chart, right? So we've seen these momentum divergences on various shorter time frames, but when you see it on the weekly chart as well, you think maybe on a longer term perspective this thing could have a meaningful rally. Right now we're sitting at around 220 in NatGas. I wouldn't be overly surprised to see a retest of that $3 level at some point in the next couple of months. That's the scenario that I'm looking for. Okay, that 190 level as well was quite important, and it did hold, right? Fundamentals also look supportive. We've seen LNG demand creeping higher. You see this blue line going up there versus where this thing was a year ago at this same sort of time of year. So the year-on-year change in the demand has consistently been beating. So that's a relatively bullish sign. Now, these things are pretty volatile. If the weather suddenly changes, things can change pretty quick here. So you need to keep an eye on it. But in general, that persistence there that we've seen for the last month is a bullish sign and is obviously helping these things to stabilize. Implied vols have also been crushed as spot has been languishing down here near the bottom for a while and failed to really accelerate lower. So skew is starting to flatten, as we've said, from previously very steep put skew of around 10 vols. It's down to around 3.5. We think this might be indicative of a potential interim bottom here in prices and a precursor to a more meaningful bounce in NatGas. Okay, that's what we're looking for. Looking at the dashboard, obviously spot has had a bit of a bounce, so we've not got a clear strategy compass signal saying buy calls or anything like that. Remember, we entered into a bullish trade on NatGas a while ago where we did sell put spreads to buy call ratios. Why did we do that? Because it was a short vol structure and we didn't want to buy expensive volatility. Now, if we look, volatility has absolutely collapsed. From we can see here, a big move down in vol. Down here, we see negative carry, which means it's carrying itself well. I mean, we haven't seen NatGas vols on a 60 handle for quite some time. You look at the term structure, it's just a flat line as well. And you can see just how much it's been crushed over the last month. Okay, so clearly vol has cheapened. And if we look at skew has cheapened as well from 10 vols down to around 3. Okay, so what are we doing? All right, that's it for today. Thanks a lot for listening, everyone. Remember to check out our website. We've got an options trading bootcamp coming up at the weekend, and it's going to be a good one. I'll see you soon.